Hello everybody. So today I want to talk about 7 ETFs that are powered by MSTR. And MSTR, of course, is itself powered by Bitcoin. There's many more ETFs on MSTR right now than there were just about 6 months ago. And I think it's worth to have a video where I kind of discuss them all. So let's go. Let's go back to a slide. That was the October 31st slide of MicroStrategy, now called Strategy, back then called MicroStrategy, where they explained really how they see their equity and the common shares. That will always be my main holding. It's always what I'm the most interested in. But in the comment section, I see many of you always telling me about the other instruments. And so we have instruments that are much more volatile, that are higher leverage, and that have higher risk, namely wipeout risk, right? I mean, because if MSTR were to drop 50% in a day, what do you think would happen to the dailies, right? To the daily MSTU or MSTX? This is a riskier stuff. And of course, we have less risk, which is the IBIT and the FBTC. These are the Bitcoin ETFs, so not issued by MSTR. My view in general on Bitcoin ETF is that I like pure form better, but that's because I'm an original Bitcoiner, right? I mean it before ETFs were a thing, but ETFs are still just fine. Then you have BMAX. So I'll talk a little bit more about BMAX. I have some praise for BMAX. I think BMAX is very interesting. And then we have STRK and STRF. These are, of course, the preferred. They're not ETFs, but I'm going to talk about them in this video and tell you what I think about them, their advantages, etc. Anyways, let's get started. Let's talk about MSTY. So I did a full video of my takes on MSTY. So MSTY, of course, is highly praised in the Bitcoin MSTR community. A lot of people like MSTY because they have these eye-watering yields, like yields over 100%, 120, 130%. And so you even see people selling their Bitcoin to get MSTY. I did a full deep dive on it on MSTY, so if you want to get my full thoughts on this, please watch this video. But my main takes, a summary of this video, is under the hood. When you look under the hood, it's mostly cash and government bonds. And there's a few risky derivatives like swaps that are peppered in the mix, but it's mostly cash and government bonds. So know what you hold. Mostly cash, government bonds, and then risky derivatives that generate the yields. The MSTY fees are very expensive in my view. Will it outperform in a sideways market? That's the debate, right? A lot of people think MSTY could outperform in a sideways market. To me, it's up for debate. I stand on the side of the debate that over the very long run, right, let's say 5 years or more, MSTR is always going to outperform. So I stand on that side of the debate. And there's the monthly payouts. But the problem with the monthly payouts, of course, is that sometimes, and I've looked at the payouts and the characterization, and you gotta dig deep, right? You have to go into the form and look at the last year's tax form, and they tell you. And sometimes some of these payouts are simply return of capital. And so when you have return of capital, you have a decline in the share price of MSTY that's embedded in, because they're just giving you the capital back to generate that juicy yield. But make no mistake, that yield oftentimes is not income, it's return of capital. Granted, much of that yield has been income so far, and that's because of the options premium being so expensive on MicroStrategy, right? So MSTY is a way to harness the volatility of MSTR. That's a way to harness the volatility of MSTR. But these instruments, they have a history of trending way down over the years, and so the history, in my view, of these instruments is not the best. What do I prefer? If you are all about the volatility engine, if you want to make money via options, which is an entirely different form of playing the game of investing. You're not investing, you're doing options. If you want to do options, do the wheel on MSTR on your own. If pressed, I would say if you want to do high octane options, you could even do the wheel on MSTX. But keep in mind that when you do the wheel, you're harnessing the volatility of a stock, and it doesn't, like, all of the underlying MSTR really doesn't matter. In fact, if you follow this space, for example, SMCI recently, the past 2 weeks, 3 weeks, has a higher vol than MSTR. SMCI, right? Super micro. occasionally you'll have Palantir who have higher vol than MSTY. So than MSTR. So the point is, if you're trying to harness volatility, it's an entirely different game than if you're trying to like earn actual income. And if you own MSTY, that's no guarantee that MSTR will always be the high volatility horse, especially during earnings season and earnings periods. Even though MSTR has had some of the best long-lasting volatility that we can find in the market. Anyways, my view on this is why income, and of course on this channel I am notoriously anti-income. I don't understand income. Why the urge to pay taxes? Income is not tax efficient, so I don't understand income. Like, if someone wants to own MSTR, but they also need the money to live right now, why wouldn't you do a buy, borrow, die strategy, right? I mean, granted, the maintenance requirement on MSTR are a little high. That's for granted. That's for sure. But if you have a bigger stack, just borrow against it. That's kind of my take, because borrowed money is not taxed money. Of course, no financial advice, as you know, on this channel. But I'm in general, I'm wary of income. If you want income, if you want to make money, you should sell options on your own. That's kind of what I think. And frankly, it's not that hard to learn. People often say, "Oh, well, what if I don't know how to do them?" Well, guess what? I mean, today with an AI, you can learn something so quickly. Just have a chat with an AI. Dedicate an evening talking about how options work with your AI. Anyways, let me move on in this no financial advice video. Okay, IMST and MST. So IMST is the newer kid. MST is the newest kid on the block. So they both aim a mix of MSTR returns and MSTR income payouts. And actually, the only reason why I know that IMST tries to have a mix, tries to maximize both income and payout, is because of Jeff Park. Jeff Park has been on a lot of podcasts talking about IMST, and he's the manager of IMST, and he's like, I'm going to be thoughtful in how I write my options to generate income, but also make sure that I don't write covered calls whenever I feel there's going to be a big spike in the price of MSTR. So really, IMST, in my view, is as much of a bet on MSTR as it is a bet on the manager. MST, I have more problems with it. They target both, of course. They target both weekly income and leverage exposure. But my problem with it is the 1.5 to 2x key word here. Daily price performance. Daily price performance. What that means is that if you're targeting daily price performance, you're essentially a daily ETF, which means that you should not be held overnight. Otherwise, you're going to suffer from decay. So I find it weird that you have MST who's to be held. If it's a daily ETF, you should be very careful when holding it overnight, especially with Bitcoin, where you can get these crazy spikes and you can miss out. So I view MST as more of a daily product. Sure, you could argue a few weeks is fine, but if pressed between the two, and I'll call this the mix ETFs, the mix of income and gain, if pressed between the two, I would go with Jeff Park's version, IMST, if pressed. But of course, I always prefer do-it-yourself options. Always, if you're going to go that route. Now, let's talk about MSTX and MSTU, other favorites of the comments section on this channel. So, I'm somewhat positive on this one, but they have a specific use. If you're a trader, these instruments are gold. But these instruments should not be held more than a day. And if you start holding them for, say, more than a month, you're going to show enormous decay over more than a month. But if you're a trader, if you're a day trader, right? If you're focused on the day, these instruments, then in that case, they play a very interesting role. And of course, some people push it sometimes. They are very, very bullish on the next 2 weeks, and then they'll just swap everything into MSTX and wait for the pump. And then they'll swap back into MSTR. And that's something that I can't do. I don't do timing. I buy and hold. I hold stuff forever. I sit on stocks forever until they pop. So that's not my style of investing. But I understand that some people like to think and like to think that they can beat the market and like to time the market. And it's a game, and it's about your itch too. I mean, it's fine to play. If you have just tiny portion of a portfolio. Some people like to play, like to do a gamble. Anyways, you should always keep in mind that over the long term, the common always wins. This is, and we're almost there, this is MSTX versus MSTR since inception. So MSTX was launched August 16, 2024, right? We are now May 8th, 2025, right? As of closing, because they haven't updated it. But anyways, if you look, MSTR has returned 211%, right? MSTX has returned 212%. So you can see over a 8.5 month period, the returns are roughly the same. Give it 2 weeks and MSTR will have the hedge. And of course, over a 5-year period, I'll let you take a guess as to who's going to win over a 5-year period. These instruments are designed to be held short term, not long term. And by short term, I mean daily is what they are designed. So give it a few more weeks and MSTR will have outperformed over a 9-month period. However, I'll say 2 good words about MSTX and MSTU. Like I said, so they're good for traders if you're a trader. They're also good for options. If you like to write options, if you like to write, I don't know, cash secured puts that are, say, comfortably out of the money and you just want to collect the volatility, doing that on MSTX could be interesting because when I see MSTR, for example, trading at 80% implied volatility, MSTX will sometimes be at 140 or 150. It's not exactly a double, but it's substantially higher. And so these short-term instruments, they're trader things, but they could be interesting if you want to, write cash seeker puts or if you want to do the wheel. They could be interesting. But again, keep in mind you're doing a much riskier game and you're doing a trader's game. And of course, if you want to hold them, it's very short term. So that's kind of my take on MSTX and MSTU. Moving on to not a ETF, of course, is the MSTR Equity and the spot ETF. So the MSTR Equity, as you know, love it very much. To me, it's the way to go if you're going to invest in MSTR. And always remember what Saylor always says, he only works for the common equity shareholders. He respects every buyer of the stock, but he only works for a common equity shareholder. Quickly, one of the disadvantages of owning MSTR, of course, is the maintenance margin. The maintenance margin on it is, at a lot of brokers, still 100%, believe it or not. And if it's not that high, sometimes it's going to be 70, 75%. One of the big advantages, of course, of a spot BTC ETF like IBIT or FBTC is that you're going to find them at around 30%, even 25% maintenance margin. So this fosters your margin. That's kind of the main play and the main reason why I can justify owning these, for example, in a broker. Otherwise, if your broker gives you 100% on these, well, A, change brokers, but B, pure form always, right? Pure form is superior to IBIT or FBTC is what I believe. Moving on to now an ETF where I'm going to be very positive. I'm going to be very positive about BMAX. I love BMAX. I think out of all of the ETFs that I talk about today, I think BMAX is the best. So BMAX is a plain vanilla ETF, slightly expensive, that gives you exposure to MSTR converts and other Bitcoin miner converts. But let's face it, right now, it's 77% MSTR converts, the remainder of 23% that are converts from Mara and Riot. And you know I like those two miners as well. So this gives you pure exposure to convertible debt, to convertible bonds issued by Bitcoin treasury companies. It gives you that full exposure. But the big advantage, of course, of buying that, there's multiple ones. First of all, they don't pay coupons, right? This debt typically doesn't pay a coupon. It's issued at 0 because most people buy this debt for the strike price, for the optionality embedded in it, which gives you equity optionality. You have the right, when these debts are issued, they give you the right to buy the stock, say, 50% higher than the day they're issued. And once the stock reaches the 50% mark, then all of a sudden your debt becomes convertible and the value of the debt trades much more closely to the value of MSTR. And so the big advantage of that is that you have indirect Bitcoin exposure through equity optionality, but you also have downside protection via the bond structure, which means if MSTR were to fail, which I don't think is going to happen, but if it were, some of the earlier converts of MSTR, and this is what Saylor says all the time, some of the earlier converts are backed 50 times. Like some of the earlier, he borrowed $1 billion, and there's $50 billion of permanent capital, 50 billion of permanent Bitcoin that can be turned into cash at any point, right? That is just protecting the converts, because the converts are very high in the capital structure. They're the first one to get repaid if they were to have anything go south. So you have enormous downside protection in case Bitcoin doesn't pan out. But you also have upside included in it. And that upside, of course, starts kicking in once the convertible price is crossed. And for many of these convertibles, actually, MSTR is already above the conversion price, which means that the converts start trading very much in line with the stock price. And so the way I look at it is I think this could provide up roughly, even more perhaps, but I think roughly assuming 70% of the upside of MSTR is roughly what I'm assuming with this. Maybe a little less, maybe a little more, but you have protected downside. So you have access to a good chunk of the upside with protected downside because of the convertible bond structure. And so I think that's very appealing. And of course, this 70% of the upside could be even bigger if MSTR actually goes through the roof, right, and goes through the moon. If you expect very, very, very high returns for MSTR, then these become even more compelling, because once you've reached the convertible price, the convert starts trading in line, right? It starts trading pretty close to the equity. So that's very interesting to me. What I find, of course, the most interesting in this is the maintenance ratio. If you want to foster your margin, if you want to cultivate your margin, make it grow, if you want to have a nice margin bag in case there's another crash like the one we had in late March, early April, right? You want to have a big margin bag to take advantage of opportunities. MSTR doesn't really help your margin bag, because MSTR is treated at 75% maintenance ratio by most brokers, right? BMAX is debt, and I anticipate that debt, even Bitcoin debt, is often, if not always, going to be treated very favorably by brokers, because this is debt, and so this is a margin inducing, like you're fostering your margin, you're helping out your margin with this, and I find that quite appealing. That's why I love BMAX for that reason, and it's an equity that I am looking at pretty closely. Now, moving on to STRK and STRF, and I know these are not ETFs, but I want to talk about them because I never really talked about these from the standpoint of the buyer of these equities. STRF I don't like. I mean, outright. I'll tell you why in a second. But STRF is gold for the MSTR shareholders. It's not very good for the buyer because it's for the BTC skeptic. STRF is for those who think BTC is going to fail. Well, maybe not, but who's neutral, who's a skeptic of BTC. That's who STRF is for. But STRK, on the other hand, STRK is very interesting. So STRK has an 8% yield. Okay, but you have a perpetual option in there to turn 10 STRK preferred shares into 1 MSTR shares, but only after MSTR is worth more than 1,000 a share. So if you're buying STRK for the option to convert right now on the open market, STRK is trading at 92. You would be essentially paying $920 for a share of MSTR when MSTR crosses $1,000. So you're paying a good 2x, a little more than 2x the price of the shares. But in exchange for that, and of course once the shares become convertible, it's going to be very interesting, because STRK is gonna be trade once the shares are convertible. Once MSTR is past 1,000 a share, STRK is going to be trading for the option value, right? It's going to be trading much less for the yield, which is gonna be very, very interesting. And I need to dig more into these instruments. It's a fascinating instrument. Frankly, it's best, in my view, it's best for those who are looking for real yield. Not return of capital that an ETF decides that month because they didn't do good enough on options. Not return of capital, but a real yield. This is a real yield. You know, it currently yields 8.6% if you buy it at 92. And if you think MSTR has explosive upside, you got an option embedded in it. You got an option embedded in it, and it should trade in line with MSTR once MSTR crosses $1,000. I find these instruments very interesting, and for somebody who's trying to do income, and somebody who's also trying to have some upside from MSTR common, you know, sometimes there's no need to look further than what Saylor has created. Saylor has created Strike for that reason. Now, Strife is for the Bitcoin skeptic. Strife is for the person who thinks 100,000 is a little high for Bitcoin. It's not going to go much more. Strike yields 10% in perpetuity. It's heavily undervalued, no matter how you look at it, in my view. And why do I say that? Because, of course, it's, again, backed by a bunch of Bitcoin on the balance sheet. So is Strike. And Strike and Strife and the converts. This is another point. They're undervalued because, really, you have a company who did not take your money to invest in a business endeavor, which may fail. You invest in a company who got your money and put it in the hardest asset on earth and still has that asset. And in fact, even if Bitcoin doesn't move that much, they still have the money that you gave them, right? MicroStrategy still has the money that you gave them, even if Bitcoin doesn't go up that much. So really, the backing of these instruments is not the present value of future cash flow. The backing of these instruments is actual permanent capital. These instruments are not backed by a manager's promises of business success or by a manager's hope for turnaround success. No, these bond instruments are backed with actual capital, right? And so this is very powerful stuff. And a key consideration whenever we look at any of these instruments, but especially Strike and Strife and the convertible mostly not, because mostly zero coupon, but a few of the convertibles have still like a 1% or 0.5% coupon for some of them, so slightly even. But a key consideration is, of course, I know right now. I saw the meeting on Wednesday. Everything's doing fine. Everything's doing just fine. The surveys are saying that everything's fine, nothing bad at all, per Jay Powell. But the odds are that at some point Jay Powell will not be the Fed chair anymore. At some point, policy will not be dictated because of a political feud between two highly powerful men who don't like each other. And maybe at some point, the chair of the Fed will start just looking at the economy. And that means that will likely be the new Fed chair will do that. And that means that at some point, perhaps in 2026, the rates will drop. And what happens when the rates drop? These instruments, of course, with a fixed yield, become much more valuable because now the quote-unquote risk-free rate has dropped. So anyways, I hope you liked this video. I hope this is comprehensive enough, talking about the over equities, the over ETFs mostly, right? Some preferred the over ETFs available beyond just MSTR. So this was not investment advice. This is not financial advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.